Welcome to Life in Calgary, Alberta. I'm your host, Patrick Murray, and today I've got a real treat for you. We're going to talk about the 2025 CREB forecast, which is the Calgary Real Estate Board's forecast for the coming year. Now, this is pretty exciting for me because I look forward to it every year. We sit down and we discuss, or we listen to our chief economist, Anne-Marie Lurie at the Calgary Real Estate Board, discuss what she thinks is going to happen for the coming year. And there's a lot of moving parts in any year. Never mind this year with potential tariffs coming from the United States and how long those might last, not to mention the looming possibility of a Canadian election coming up. So as you can see, there's a lot of moving parts happening. So we're going to jump into that and talk about what she has to say. But before we do that, if this is your first time to this channel and you would like to know everything there is about what it's like to eat, sleep, breathe, live, and play in Calgary, Alberta, then please just hit that subscribe button and click that bell so you get notified every single time I release a new video. Now, I've lived in Calgary since 2001, but I've been a realtor here since 2010. And all of this longevity means I have some specialized knowledge about the city of Calgary and the surrounding bedroom communities. So if you are considering a move to the city of Calgary or one of these bedroom communities, or you're curious and considering putting your home in the market, and you'd like to chat, please feel free to reach out to me, send me a text, email, or a phone call. I will absolutely get back to you. All right, guys, let's do this. Let's check out the latest and greatest CREB forecast for 2025 right after this. All right, so let's jump into things. So as I said, we're going to talk about the CREB forecast for 2025. And again, this is a yearly event that happens at the Calgary Real Estate Board where we have the CREB forecasting conference. And the highlight, of course, is listening to our CREB chief economist, Anne-Marie Lurie, give her forecast for the coming year. Now, before we jump in, it is important to note that Anne-Marie is fairly conservative in what she says, and you're going to understand that as we go along here. So we'll see where we end up, but I can tell you that her forecast for last year, even though she said that we were going to be, roughly 7 to 8%, I think she was a percentage point off of what the growth was over last year, which is pretty incredible. I mean, without having a crystal ball. So that's how good she is. Now, the beginning of the year last year, I thought, oh, this is way off because we came out gangbusters. But then things changed the second half of the year, and they did kind of slow down, and things changed a little bit, and that's how we got to those numbers. So now we're going to look at 2025 and see where that goes. So in 2025, Calgary's housing market is expected to stay strong, with sales projected at over 26,000 units. And that's an impressive 20% above long-term trends, even though it's less than the number of sales we've had the last couple of years, keeping in mind that we've had some real record-setting years the last couple of years. Now, this strength is fueled by gains in population, employment, easing lending rates, and better supply options. And while we'll see growth in detached home sales due to improved inventory and lower interest rates, slowing migration, increased new construction, and economic uncertainty may temper resale activity. With a record number of new builds boosting supply, the market is moving toward balance, slowing price growth to around 3% annually, and it's shaping up to be an active and ever-evolving year. Now, economic risk could play a significant role in Calgary's housing market stability. The primary concern, of course, is potential tariffs from Canada's largest trading partner, with scenarios ranging from severe 25% tariffs on all exports to no tariffs at all. Now, moderate tariffs are the most likely outcome, avoiding a recession and maintaining Alberta's economic growth leadership in Canada. And I can tell you that this report is basically looking at a moderate, forecasting a moderate tariff climate. Now, if severe tariffs are imposed, Alberta could face a recession, reducing investment, employment, and consumer confidence, which would then dampen housing demand and sales. Now, if the energy sector happens to be exempt or tariffs are short-lived, Alberta's economy could quite likely thrive, boosting job growth, migration, and housing activity. And while economic uncertainty and a federal election may influence confidence,
easing lending rates and stable economic conditions could still support stronger than expected sales, and the market's trajectory will likely hinge on how these risks unfold. Alberta's energy sector continues to thrive, boosted by higher energy prices, favorable exchange rates, and increased production from the TMX pipeline. Population growth, fueled by international and interprovincial migration, has further supported housing and construction activity, even amidst the higher lending rates. While concerns about potential U.S. tariffs have moderated growth expectations for 2025, Alberta's economy is still forecasted to expand, and growth will also be driven by investments in alternative energy, carbon capture, food manufacturing, and AI data centers. Rate cuts by the Bank of Canada are also expected to provide additional support. Now, if Alberta avoids U.S. tariffs, economic growth could nearly double current forecasts, potentially spurring stronger interprovincial migration and heightened housing activity. Calgary's employment growth is forecasted to moderate to 2.3% in 2025, down from the 4.4% in 2024. While the employment rate is expected to rise slightly to 7.8% from 7.6%. In 2024, high migration levels expanded the labor force faster than job growth, with younger demographics and newcomers most affected, creating minimal impact on housing demand. Now, employment gains in 2024 were led by manufacturing, food services, transportation, and recreation sectors. For 2025, growth is expected in the construction industry, retail, healthcare, and education. Slower migration is expected to ease the labor force growth, stabilizing unemployment rates by year end. Now, Alberta's population growth is forecasted to slow to 1.9% in 2025, and that's down from 4.4% in 2024, while Calgary's population growth is expected to moderate to 3.1%, which is a decline from 5.6%. This follows record high international migration and strong interprovincial migration that significantly boosted housing activity in the recent years. Now, although migration levels are easing, they do remain strong. Federal policy changes are anticipated to reduce both temporary and permanent international migration, while interprovincial migration is also expected to decline from recent peaks. Now, despite the slowdown, Calgary's growth is projected to outpace the provincial average, continuing to drive housing demand. By the end of 2024, November 2024, I should say, there was a record 22,563 housing units that were completed, including 9,340 purpose-built rentals, significantly easing pressure on both resale prices and rental rates. Now, total new home starts for 2024 surpassed 22,652 units, and this is exceeding 2023's 19,579 starts, with nearly half of the starts being apartment-style units. As these new units are completed, increased supply will provide more options for buyers and further alleviate price pressures in the resale market. While new home starts are forecasted to slow in 2025 as the market rebalances, activity is expected to remain strong, supported by lower interest rates and opportunities for both move-up and first-time buyers. However, this growing supply may shift the dynamics in certain resale market segments. The addition of over 5,500 purpose-built rental units by October 2024 has raised vacancy rates in our city, particularly in downtown Calgary, easing pressure on rental rates, which is good news for renters, of course. This surge in supply, fueled by declining vacancies and rising rents over the past 2 years, is set to continue into 2025 as more units are completed. With slower international migration tempering demand, rental availability is expected to improve further, keeping downward pressure on rental rates throughout the year. In 2024, a limited supply of lower-priced detached homes really did constrain sales, with declines in lower price ranges outweighing growth at the upper end. Overall, detached sales decreased by 2%, aligning with long-term trends. Tight market conditions drove an 11% annual increase in benchmark prices, though new listings and higher price ranges helped ease sellers' market conditions later in the year. For 2025, inventory for homes priced above $600,000 is expected to improve. Easing lending rates and pent-up demand should support slightly higher sales despite slowing population growth, and the market's move towards balanced conditions is anticipated to moderate price growth to 3%, with stronger price growth for lower price homes compared to higher price properties, depending on location and price range. Now, there are some key factors influencing the 2025 housing market. Number one is the economic context. Lower lending rates and increased housing supply are expected to sustain strong demand. Population growth, slower interprovincial migration may reduce activity in higher price market segments. And market segmentation. Growth in supply relative to demand in the upper price ranges is anticipated to moderate price increases. In 2024, the limited availability of lower-priced detached homes led more buyers to semi-detached properties, driving a nearly 5% increase in sales. This trend is expected to continue as affordability remains a challenge. Supply constraints kept the market in seller-favored conditions, resulting in an 11% price increase. However, the rise in semi-detached starts, which surpassed previous years, is expected to help ease price pressures. Now, despite this, prices are still projected to rise by over 3% in 2025 due to continuing supply-demand imbalances. Now, some key factors influencing the 2025 housing market for semi-detached homes. Well, affordability pressures. Semi-detached homes offer a more affordable alternative to detached homes in the same community. Supply growth. Increased construction starts will help ease tight market conditions, especially in higher price ranges. And price sensitivity. Prices are expected to rise, but at a slower pace due to improved inventory levels and shifting towards more balanced market conditions. In 2024, a surge in new listings led to increased inventory, easing some price pressures, although strong sales kept the market seller favored, resulting in a 14% annual price increase. Now, the most affordable East and Northeast districts saw the fastest price growth. Inventory growth focused on properties above $400,000, accounting for roughly 77% of all inventory. In 2025, demand for affordable row homes is expected to remain strong, but increased supply in both resale and new home markets will slow this price growth. Market conditions will vary by location and price range, with higher price units facing more competition. Some key factors influencing 2025 row homes. Well, inventory growth. Increasing listings and new builds will help ease shortages, especially in mid to upper price ranges. There's location-specific trends. Affordability-focused districts will experience stronger demand and price growth, while higher price areas will see more balanced market conditions. And of course, affordability, easing lending rates, and relative affordability will continue to support demand for new homes. Now, the apartment sector. Well, we have some limited supply happening here. Limited availability of lower priced apartment units led many buyers to consider apartment style homes, particularly in the affordable segments, which saw inventory depletion. Now, inventory growth. In 2024, inventory growth was primarily seen in units priced above $300,000, with less than 30% of inventory priced below that threshold. And some sales declines. Apartment sales fell by nearly 4% in 2024, with the decline in units under $300,000 outweighing gains in higher priced units. Market conditions shifted as more units priced above $300,000 moved toward balanced or buyer market conditions, which eased price pressures. Now, some price trends. While prices rose by 15% annually, they trended down in the fourth quarter. In 2025, more completed units are expected to better align supply with population growth, improving market balance. And the outlook, well, with increased supply across the new home rental and resale markets, condo resales are forecasted to decline by over 3%, and prices are expected to rise modestly by less than 2%. Now, some key factors influencing 2025 apartments, well, new home supply. Increased rental supply and new condo completions may shift some demand toward the competing new home market. And shifting market conditions. A move towards balanced or buyer favorite conditions in higher price ranges is expected to slow price growth. And easing price pressures. Easing lending rates and stable prices could attract first-time buyers to the market. So looking ahead to 2025, the Calgary housing market is poised for a period of moderate growth influenced by a variety of factors, including easing lending rates, population dynamics, and increased supply across multiple sectors. While affordability pressures continue to drive demand, particularly in lower price ranges, the market is shifting towards more balanced conditions, especially in higher priced segments. A surge in new home completions, including purpose-built rentals and new condominiums, is expected to alleviate some of the supply shortages that have characterized the market in recent years. Now, this combined with a slowdown in interprovincial migration and potential shift in demand towards more affordable housing options will help temper price growth. So the new year will likely see stronger demand in certain areas, particularly for semi-detached homes and row homes where affordability remains a key consideration for buyers. Meanwhile, the apartment market is anticipated to experience a modest rise in prices, though new supply will help keep conditions more balanced. And as the market stabilizes, first-time homebuyers, especially in the condo and lower price sectors, may find opportunities aided by lower interest rates and more inventory choices. Now, while challenges remain in terms of affordability, the overall outlook for 2025 remains positive, with strong demand expected to continue in the face of expanding supply and more favorable market conditions.
So as I said earlier, if you are considering a move to the city of Calgary or you're considering selling your home and you would like to discuss what that might look like, please feel free to reach out to me, send me a text, email, or a phone call. I will absolutely get back to you so you can live your life in Calgary, Alberta.